Welcome to The Architect. My name is Edward Mugo, and it's always a pleasure to host you on The Architect. Today we are talking about some very interesting matters. A question came up, what financing documentation is required? And that's what we're handling today. So keep watching The Architect. My name is Edward Mugo, and our contacts are as below. If you've not subscribed, take a minute and subscribe before I get back. What are financing documentation? Financial documentation are those documents are required for you to access finances, period. Now, if obviously you are going as a self-financing, you don't need any documentation. You probably just need the documentation that we had mentioned in our earlier video, the approvals that are required. And when I talk about finance documentation, I'm talking about in regard to building projects. So what you require is basically your building approvals. If you're funding it yourself and you run with it, the only thing other than the building approvals you require is obviously the cost of the project, which is now done by the quantity surveyor, who is a QS, who tells you this is the amount of money you need. The other documentation you require, and probably the QS will prepare this for you, is a cash flow. How much money do you need to budget every month on this project? So other than that, I think you're good to go if you're doing your self-financing. The other way of financing it is if obviously you're getting into a loan, a bank loan or a circle loan. What do they require? Now, every bank or every financial institution has its own list of requirements from you. But from a building perspective, what we found out that they require is one, approved drawings. Approved drawings with approved NEMA and an NCA certification of the contractor you're going to use. So those are very key. They need to confirm that your building project is approved by the county. They need to confirm that NEMA do not have a problem with it. They need to confirm that you're going to use a contractor who is approved by NCA. Remember our video about that, which we did talk about it. Now, other than those approvals, they may oftentimes require a bill of quantities by a registered quantity surveyor. This now shows them the total amount of money the project is going to require. They will certainly require the cash flows or the drawdown the program going forward. If the project is going to take a year, what is your proposed drawdown? The QS will be able to do that for you so that you can tell them every month this drawdown is what we require to do on a monthly basis. They would require that an architect is involved in this, and the architect needs to be registered so that he can give what is required, what is called a certification. An architect certificate is a document which looks like what you're seeing in the screen right next to me, and that document certifies the amount of total funds available for the project, certifies what has been certified for that certificate, and certifies what is due to the contractor immediately, signed off by the architect. So it's important that your architect does that, because the bank will require that on a month-to-month basis. Some banks will obviously require from their end, they may have a team on their end, a team of a project manager or a quantity surveyor who now supervises on their behalf that your project is running in the way that you are told them it's going to run. So for me, those are the key documentation from a building perspective. Obviously, by the time you go and borrow money from a bank, you need to satisfy them about the level of security. Oftentimes, the own security for that project may not be sufficient. You may then require to have additional security to make sure that that project finance is secured well. Now, you need to convince them that you have the income that can pay off that loan. It could be that they may accept the income from your current project, which is ongoing, but oftentimes they require you to show them, even as an individual, you have your own income, which will come in case this project takes a long lead time. Some of the questions one should ask when you're getting a building project loan: how much time are you given by the bank? How much time are they going to give you before they start demanding their principals back? Because, of course, it's very unfair for a project for you to borrow, say, 100 million, and next month you start paying the principal back. Normally, many banks give you a lead time, which now you build your project, complete it, then you start paying back the principal amount. A lot of times, they tell you that within that project time which you are building, you need to pay them their interest. So that has to be factored in, that the interest payments have to be factored in. There are some instances where the interest can be capitalized and paid off together with the principal. But that is an individual discussion between you, the project owner, and your finance partner. The other way is, we've talked about JVs in a previous the video. What documentation is required for JVs? JVs now come up with a different modality. You need a feasibility study. We intimated that for the JV partnership to work, the incoming finance partner needs to be comfortable that the project will make money. So therefore, a feasibility study with the market research and cash flows is very, very important. And that one is also required in case that JV SPV goes to borrow money from a bank. SPV means special purpose vehicle, which now is a limited liability company created by the JV partner and yourself, which goes then again to borrow money from the bank. So that entity that goes to borrow needs to show that the cash flows are viable. The feasibility is good, the cash flows are viable. So that's a very important documentation. Obviously, all the other documentations to do with the project are required. The approvals, the bill of quantities, all that are required. Securities may also be required even in a JV, the format. It may be that the bank or your financial partner needs a bit more security than the project itself or the land for the project itself. But that's again an individual discussion you have between yourself as SPV and the financial partner that you come in with. A lot of times, you need to show what you, the project owner, is coming up with as part of your contribution. It could be the land, it could be the land and money, it could be the land, money, and expertise. You could say, look, I've already paid my architectural team so much amount of money. So these drawings, I've already invested in them. So that is what you are coming to the table with. So it depends on how you took it. But each project is individual and each project requires a different approach. But on a nutshell, those are the various documentation required from a financial viewpoint for each project to be done. I would encourage you to go for a financial partner who understands building projects. There are banks which are commercial banks, a lot of them, but many commercial banks have a sector for mortgage. It doesn't say that they are experts in it, but I've always discovered that it's always better to go with a financial partner who understands the way building projects roll up. They're very different in the way they structure their contracts. We say a commercial, the businessman who wants to get money to buy a couple of more lorries or trucks or buses. So it's very important your financial partner understands the way the project proceeds from inception to building to deliverable. So it's important that they have the expertise within themselves. Having in-house people who are trained is very important. So do your investigation, find out whether your bank finance partner has some building people in their team. They have an architect, probably have a quantity surveyor, project manager, people who understand the language of projects. They understand that sometimes projects could have delays. What happens when there's a project delay? Do they come for you immediately and come and auction you off? You need to have a finance partner who understands that whatever happens in the building field needs to be treated with care, because delays is many projects are there. It doesn't mean the project is going to fail. It just means that it probably needs to be a bit of refinancing or a bit of retweaking of the model of finance. We'll be happy to assist in this and any other project. And we hope my information has enabled you to learn a little bit more about the subject matter for today. My name is Edward Mugo, and it's a pleasure hosting you on The Architect. Keep watching and do not forget to subscribe. Thank you and God bless you.